Thank you for coming from Fort Worth today.
Thank you. Good morning. It's a pleasure to be here this morning. I hope you've all had your morning coffee, and I'm really pumped up about this topic. I mean, what's more exciting than taxes, right? I was complaining to my daughter about how boring my introduction was, so she sent me this quote to use. I think you'll enjoy it. The art of taxation consists in so plucking the goose as to obtain the largest amount of feathers with the least amount of hissing. So this morning, I want to help you keep some feathers on that goose. So when you think about taxes, you tend to focus on the upcoming tax season. Well, as a bookkeeper, this is probably the most busiest time of the year. There's little you can do now to change your taxes for 2023 legally. Okay, however,
I love her.
Speaking his language.
2024 is just beginning, and so it's the perfect time to start planning for taxes for next year. So today, I want to present my topic as a three-piece puzzle, okay? Each piece is necessary, and it interlocks with the other pieces to give you the complete picture. So the three pieces of the puzzle in a tax plan is tax strategy, documentation, and reporting. Now the challenge here is most people focus on the third part regarding business and personal taxes. There can be shocking news in March if you don't know where you are and you have more tax liability than you anticipated. I mean, this has happened to me in a big way, and it was a very painful lesson. So this morning, I want to discuss some ideas for you for this new tax year. Now, I want to offer a disclaimer here. I've been in this business for about 1.5 years, and there is so much to know about tax rules and laws. So, I'm not a CPA. I can't offer you official tax advice. But what I want to do is just put some ideas out on the table for you to go to your tax consultant, ask questions, and maybe some of these would benefit you. So, tax strategy. Tax strategy is a plan or action that reduces your tax liability. This means that every single legal deduction has been claimed and all permissible tax cutting techniques have been considered. I want to offer you some suggestions. I know everyone is in a different type of business. They're probably organized differently. Some of these may be appropriate, some of them will not. Again, these are just ideas. So the first strategy seems simple, but it's very important. Examine your financial statements monthly for more than just your cash flow. So keep track of your income and your profit and loss statement and know where you are according to the tax brackets and the time of year. So don't get caught off guard by hitting that upper tax bracket on December 15th. The second idea is take advantage of the Class A deduction for IRA and pension plans. For the small business owner, this is one of the best deductions that you can have. If you're under 50, you can contribute $6,500. If you're over 50, your limit increases to $7,500. Now for the new year, and if you're married filing jointly, those amounts double. Now this increases for 2024, and they rise to $7,000 and $8,000. So there's different types of IRAs, so consult your either tax consultant or your financial advisor to see which ones work for you the best. Now this is one strategy that will work on your on your 2023 taxes. So you have till April 15th to open and fund an IRA. So you can still do this for your 2023 taxes. And as a side note, a recent change allows you to continue making deductions past the age of 70 as long as you're earning income. So another tax savings idea is a class of deductions the IRS calls fringe benefits. So these are contributions that the employer makes to the employee that benefit both. They're not counted in gross wages for the employee, and most are excluded from Medicare and Social Security taxes. So I want to highlight a few of these. Employer paid insurance. This includes medical insurance and group term life insurance. Meals furnished by the employer to the employee are not counted as income as long as the meals are furnished for the employer's convenience and on his business premises. Medical reimbursement plans are amounts paid by the employer to the employee to reimburse him for expenses incurred for medical care as long as it doesn't discriminate. So you can't have different classes of employees and reimburse them differently. It has to be non-discriminatory. Dependent care expenses. When an employer pays for child care services for a child or a disabled dependent and an employee up to $5,000. And the final one is tuition reimbursement plans. So under the IRS guidelines, tuition assistance is tax-free up to $5,200 per employee per year. So Chipotle is a well-known company that does this. And so the idea here is that you would pay them less as far as an hourly wage and use some of these benefits, and then you're not paying taxes on them, and your employee doesn't count them as his gross income. So it benefits both the employee and the employer. Now, a lot of these all of these have to be officially documented, but a lot of these fit under what the IRS calls a simple cafeteria plan. And this is a plan for small businesses that allows your employee to kind of write their own benefits pre-tax. So you can give them a set amount, and they can say, oh, well, I want it medical reimbursement, or I want it to go to child care. So it's something to work with in combination of your hourly wages to your employees. Okay, the next one. I see several of you with young children. This might work for you. So the IRS allows you some excellent tax breaks to pay your children. If you are a sole proprietor or a partnership where each partner is a parent of the child. So payments to children under the age 18 are not subject to Social Security and Medicare tax, and those under the age of 21 don't have to pay FUTA. Now you have some specific qualifications. So you have to pay your children for appropriate work with a reasonable salary, but this is so many benefits because not only can you pay your children, even as when they're young, you can teach them the value of money. You can have them earn money and then pay for their things like spending, savings, school fees, clothes, whatever you would normally pay for your child. Now the limit for this break is $12,000. It's right around where the standard deduction is. Okay, so you can give your children a strong work ethic and save money in your business. Now there are some restrictions. You have to pay them for doing something concerned with your business. So you can't pay them $1,000 to make your beds. That doesn't work. But you can pay them, and it's a great tax break for businesses. Investments. If you have a lot of investment income, you should take advantage of the state and municipal interest exemptions. So on city and state and municipal obligations, you don't have to pay taxes on the interest earned. And so this can really add up if you do have a lot of investment income. A lot of investors use this. Now you do have to pay taxes on capital gains, just not the yearly interest. So where are we at? Okay, automobile expenses. So I can't emphasize how important it is to keep track of your mileage. Make sure you write your mileage down at the beginning or end of every year, because you'll need to have that information for your taxes. There are 2 ways to file your mileage for your automobiles. So there's the standard mileage rate. So if you drive a normal car, the standard mileage rate applies at 65.5 cents per mile. Keep a log, and no, this doesn't apply to commuting. So it's your business miles. The alternative method is to keep track of your actual expenses. Now, this is best used if you're just driving a normal car. This usually is not the best way. It's usually better just to take the cents per mile. But if you have a heavy work truck or you drive a luxury car and your maintenance is higher, it's usually better to use the alternative method and use your actual cash expenses. Now, many apps can track your mileage. QuickBooks has its own mileage tracker. There's other apps such as Hurdle, TripLog, and Everglance. Most of these have a free version that you can download if you don't drive that much. You can also log your mileage by the simple old-fashioned way. You snap a picture at the beginning of your trip and you snap a picture at the end, and then you just log it in a spreadsheet. Or you can resort to, pen and pencil and a journal if you want to. A side note, medical expenses. You can take mileage for driving to medical, doctor's office, hospitals, and so make sure you log those medical miles. If you actually travel for medical, you not only get to take your mileage, you get to take your travel if you fly to a clinic or something. You can also deduct your meals and your lodging. Now there is a daily limit for this, so don't book yourself at a luxury hotel and think that's gonna work, okay? Home office. So I know a lot of you guys here probably has a home office. The guidelines are pretty strict, so you wanna make sure you consult the guidelines. Your office space has to be used exclusively and regularly for your principal place of business. So like you have an office, but you also use it as a spare bedroom, that will not count, okay? So you have to have it exclusively for your business. Daycare facilities, there's a few exceptions. Daycare is one of them. And there's two methods of figuring your deduction. There's the simplified method, which the IRS has established a $5 per square foot rule. And so there you just take the area of your office and multiply by 5, and you get your qualified home office. The deduction limit is limited in this method for 300 square feet. So $1,500 is your maximum. The other way is to use the actual cost method. And you figure out, by figuring out the percentage of your office. So if you have the 2,000 square foot house and you use 150 for your office, you just figure that percentage out. You can deduct all your direct expenses, and those direct expenses are anything that you would not use if you didn't have your office. So if you have a second phone line, all of those expenses are at 100%, and then your indirect expenses have to be multiplied by your percentage. So like house insurance, electricity, all your utilities, things like that, you multiply by the percentage. If you paint your whole house or the inside of your whole house, you paint the whole house, you'll use a percentage. If you just do repairs to your office, that's a direct expense and you get to subtract the whole thing. So depreciation and amortization. Now this is always the most confusing part. And if you do your taxes on your own, you want to make sure you take the depreciation that you need to. We had a rental house, and I didn't realize I should be depreciating that to rental. And it was a very sad time when we actually sold that rental, and I had to take a depreciation. So make sure that you take depreciation. Now there's the IRS has established method recovery rates for each piece of property, each type of property that should be depreciated. And you're allowed to write off the full cost of some things if you do it's called Section 179. And this allows you to write off the full cost in the first year up to a ceiling amount. Now, this is a great tax savings, and it's very helpful if you're really close to hitting that next tax bracket, but you don't want to use this tax strategy indiscriminately. Because if you sell that property and you've written the whole thing off, you have to add that back to your income when you sell it. So make sure you think about what your projected income is, how long you're going to keep that before you decide to write it off, totally in that first year. Charitable deductions. Business can deduct charitable expenses if they donate inventory, property, equipment. So a lot of times you get more of a benefit if you donate those things rather than trying to sell them used. So don't always think, oh, I don't need this anymore, I'm gonna sell it. Think about donating it, because a lot of times the write-off is better for you. So that was a long thing on on tax strategy. I want to talk about documentation now. The goal of documentation is to ensure All reporting requirements have been met. As a small business owner, it's your responsibility to document your income and expenses appropriately. However, new accounting programs really streamline this process. So there's a lot of accounting programs on the market. I typically work with QuickBooks Online and a new one out called Puzzle Financial. QuickBooks Online is one of the top accounting programs in the industry, and it has a wide variety of features. If you're not familiar with it, it has reporting, inventory, app connection, scalability. This program accommodates various needs with the different tiers, ranging just from the small startup business to enterprises with industry-specific reporting. It features payroll, time tracking, and a built-in system for receipt tracking, which is really nice, and I'm going to talk to you about that. The very basic version of QuickBooks Online starts at $30, and then it goes up according to how many features you need. Puzzle Financial is a new startup accounting program. It's native to a lot of sales channels such as Stripe or credit cards. I don't know if any of you use Ramp or Brex, but it uses AI to automate your categorizations. It incorporates a dashboard that gives you your real-time cash balance. A lot of accounting programs don't give you a real-time cash balance. Puzzles analyzes your operating burn, your runway rate, and it helps you reconcile your accounts automatically. There is a 30-day trial with this program. If you're interested in trying out a new accounting program, the basic subscription for this is $50. It's not as in-depth or developed as QuickBooks Online, but it's a really good program if you're a startup and you don't have a lot of methods of payment. If you have a lot of methods of payment, it gets a little bit more complicated. So I don't know if you're all aware of what accounting programs will do for you. And so I just want to walk you through just what it all will do. So accounting programs, most will automatically connect to your bank, your credit card, payment processing centers, and downloads directly into that accounting program. This really speeds up the error, or speeds up the time frame that helps correct input errors. Rules can be established that automatically categorizes your transactions. Banks now provide a read-only access login. So as a bookkeeper, a lot of my clients provide me with a read-only. I can go look at checks they've written to categorize them. I pull bank statements, but I have no authority. My access will not allow me to do any transactions. So most banks provide that now, which is kind of new to the industry. Let's see. Receipts can be uploaded to QuickBooks Online email address. So, like you're out with a client for lunch, document. You also need, especially for higher priced lunches on meals, you need to write who you're with and just tag what you talked about. Click a picture of that receipt, you email it to QuickBooks Online. QuickBooks Online, if it can read it, sometimes with restaurant or gas receipts it's a little bit harder. It will take all the pertinent information and it will automatically match that, connect it to the transaction. So this is really helpful. So I don't know if you guys have been in the situation where you put your receipts in a folder or a box. You come back and try to look at them a year later to get all that tax information. A lot of those receipts aren't readable. Something about the tape in like Home Depot, you can't read them. Well, if you attach them to your transaction in your accounting software, you will always have that receipts for your information. It also does things like it connects with a lot of other apps, like Amazon Business. Your QuickBooks Online connects with Amazon Business, and it funnels in those transactions. So if you need to know what you bought at Amazon, you click on a tab, and there it is. You can see it. Amazon has already funneled it in there. You don't have to go externally looking for all those transactions. So using an accounting software program for documentation is really important. Let's see. I got lost here.
You did it right.
Almost done. The final one is reporting. That's it. Okay, so on reporting, reporting involves providing all the necessary and pertinent information to your accountant to file accurate returns and pay the lowest amount of taxes, maintaining the legal standards, but also looking towards your future liability of taxes. So I'm gonna say this, in that not all accountants are equal. So when you're looking for an accountant to do your taxes, you wanna really ask them, if they will help you on strategy. So there are some accountants out there that really focus on strategy. Will really help you tailor what you're doing as a business to get your tax liability lower. Make sure that you make your estimated tax payments throughout the year. And the IRS has recently raised the penalty for this, and so if you're not making tax payments, you're gonna be writing a check out to the IRS that's far greater than you should have to. I touched briefly on documentation. Keep track of your expenses as you go. Oh, and I don't know if I said this, with meals, I don't know if you're aware of this, but with meals, if you do a regular business meal, it's at 50%, but if you're traveling, you get to deduct that at 100%. So always keep your meals separated, travel meals versus just regular business meals. And then you need to document that. So there's like who, what, why, when, and where, or something. So basically your receipt's gonna give you how much you paid, where you went, and the date. You need to write who you were with and the purpose of that meal. So meals are the one that you really need to document, especially if you have higher cost meals, because that's typically a flag if you have a lot of meals that the IRS may come back to you. Okay, so got off track there. And then the final thing is review your taxes when your accountant gives them back. Okay, I know a lot of people just sign them and they accept their accountant's word. Well, accountants are very busy. Okay, this time of year, tax season, they're burning the candle at both ends. So they can easily miss something, or maybe they didn't understand in your documentation. Every business is different. And maybe they didn't understand something. So it seems simple, but review your taxes after you get them back and just make sure that all your deductions are there. So I hope that you've learned a few things. Thank you so much for this opportunity to speak with you.
Thank you, Chris. Does anybody have any questions?
Yeah.
Okay.
You didn't talk too much on health savings accounts, but do
Yes.
those deductions have to be made in a year? Like 23 has to be made in 23, you can't do them like IRA?
As far as my knowledge is, it's the IRA is only one of the only things. So every health savings account is different, but you can't pull out you can't post it. I don't think so.
Oh, well, contribution amount is what I was thinking.
Yeah, I don't think so, but I can look that up for you.
So either, but I was wanting to make sure.
So my 13-year-old wants a computer, and I told him he had to pay half, and he said, well, if there's anything you could do, and I put him to work at the shop, I could pay him, and he could pay that back to me towards the computer.
Mhm.
Now I'm gonna start charging him rent.
I have a couple of questions. You mentioned a couple of terms that I've never heard of. Operating burn and runway something?
Oh, operating burn and runway rate. So operating burn tells you how fast you're going through your money. Give you a graph. So obviously you want your operating burn to go up, so you're making more money than you're spending. But sometimes on accounting programs, you really have to work to find those. So Puzzle gives you that on the dashboard. You'll see a graph, and you'll see your expenses for the last, I think it's 3 to 6 months. And it'll show you whether your operating burn is going down or going up. Runway rate tells you at the current amount of what you're making and spending, how many months you can still stay in business.
Oh,
Right?
that's a novel idea.
So
Somebody who undercharges for everything.
right. There's a lot of expenses that you don't really think about,
Yeah.
And so runway rate, you can look at your cash and you think, oh, we're doing good. But then you add depreciation in and some of those other things in.
Uh-huh.
So the runway rate really helps you see, if your runway rate is a year, that's great. But if your runway rate is like 3 months down the road, you know, okay, I either need to cut back on spending or I need to increase my income.
Prices.
Or prices, yes.
I did. Also, what do you think of TurboTax as a substitute for an accountant?
I think it's great.
Just wondered, because that's what we've been using for years.
Yeah.
Okay.
I have 2 questions.
Sure.
So as far as like paying your kids, so broad scale, how does that kind of work? So I pay my daughter and my son to do activities, I put those funds into a separate account, and then you're saying that I can then turn around and use those funds to buy clothes and school?
You know, you'll have to talk to your tax accountant.
Okay.
I know
I'm gonna write that down.
several, I work for several companies who do this.
Okay.
So I think it has to be set up officially.
Okay.
And so you're paying your kids, but you can say, okay, I'm paying you, but, you know, unofficially, this is what you're gonna do with the money. Because who wants to give your kids, you're not teaching them anything if you just give them a supply of money and let them do with whatever they
Take
want
them
to do with
clothes
it.
shopping with their money.
Right.
That was one of the first things I did with my daughter when I paid her. She had to start buying her own clothes.
Yeah, I mean, we
I
already
didn't
do
know I
that,
could do
so-
that then on my taxes.
That's exactly
so-
my point. I mean, like,
Yeah.
I already make her do
She
that. I
was-
just didn't realize that, you know, and I've heard of this, but I was kind of under the impression that like it goes into an account and it's just like, I can't touch it. So it's,
Well, you're paying them, so yeah, you put
Yeah.
it in their account.
but then they can use it for expenditures that they need for,
Yeah.
okay, that makes sense. My other question is, like, we have a payroll system that we use called Gusto.
Yes.
It's fairly new to us, maybe within the last 6-8 months, something like that, and taxes are automatically taken out. So is that considered the quarterly taxes that you're paying into, or is that kind of a separate thing?
The quarterly taxes that you're paying.
Well, you kinda said, like, if you're not paying into your taxes quarterly, you're gonna be, penalized now.
So this is your
different thing.
estimated
Different
federal
tax.
income, so you're
Okay.
paying, you're talking about payroll taxes, and yes, you have to make those on a regular basis.
Okay.
But if you own your own business,
Mhm.
then you also have to pay federal taxes, and they want them to come, depending on how your business works and how much your tax liability, most of them have to be paid quarterly.
Right, okay.
And so you just wanna make sure you're estimating your income right and making those quarterly tax payments. The last payment has to be made by January 15th.
Okay.
So if you look at your income, you always wanna see your income at December 31st.
Sure.
And if you've made more money than you anticipated, then you wanna, on that January 15th, go ahead and increase that payment.
I had that with one business that I owned, but I haven't had it with anything else. But they required me with the trucking business to,
Pay quarterly.
pay quarterly, yeah. It was a hassle, but saved trouble at the end.
Anybody else? Any questions?
I kinda have one, cause I do benefits, so on, daycare on FSA, do you find it better for an employee to do the daycare or just do the end of the year taxes? The deduction, so you can take, most people are paying more than $5,000 a daycare anyway. So you can do daycare 5,000 for FSA and take the immediate tax savings.
Mhm.
Or you can just wait and do it at the end of the year and take daycare expense there. Do you,
I have not done, daycare enough to know, I can't give you a really good answer on that.
So you're a bookkeeper, not an
I'm a
accountant. You
bookkeeper,
didn't want
not an
that.
accountant.
Yes, you did.
But as a bookkeeper, if you're not aware of the tax laws and regulations, then you can't really help whoever you're helping. And plus for my own personal benefits, I've always done my own taxes. I have kind of some complicated tax situations, and so that's always made me, keep up with taxes. And so when I started my bookkeeping business about 1.5 years ago, I knew that I really wanted to lay the groundwork on taxes, because ultimately that's why you keep track of your finances.
Right.
So, exactly.
one thing you might look at, and I just discovered this one this week from my daughter, she works for probably the largest insurance brokerage in Texas. They have their own attorney section and all that helps with all that. So they have told them, their section has told them that on the FSA, 20 years I've been doing this. There's a annual or max, 3,000 and something for medical flexible spending.
Right.
Okay, she has just learned through their tax people that that's per employer. So like, she works for them and her husband works for the city, and they can both do FSA and max it out. And I went, really? I thought if you ever got audited, it can only be the one. So that might be something you should look at, cause that's a big deal if
Yes.
both parents are working and
Right.
braces and all that.
Right.
So
And-
we
It
just-
is,
Yeah.
yeah.
I know.
FSA got plenty with
I
braces.
know, I had 3 kids get braces, I'm very much aware of it.
And a lot of these savings, like one doesn't seem that big, what you have to do is put a lot of those pieces together. You know, you get some savings from your FSA, you get your savings from your IRA, you keep track of your mileage. You have to take all those things together to really give you a good tax plan.
Hey, y'all nice to your kids getting them braces.
Yeah, Dwayne would only do it if it was for the leg.
Nope.
A leg brace maybe, yeah.
No.
I'm glad you reminded me of this, like, never occurred to me, I could deduct my trip to the post office every day to mail off all my orders. Every
Yeah.
single day, 6 days a week, unless it's a holiday, I go to the post office, cause I don't trust the lady to get the mail out of my mailbox out there on the highway and not drop it and it's blown away. She's wonderful, she's a little scatterbrained sometimes. She'll drive off and forget to put a package in there and have to bring it back the next day.
And it really does add up. If you're keeping track of all your mileage, it really adds up.
Meals, you said travel meals and other meals. What's the distance you need for travel meals?
I believe it's 200 miles.
Oh, okay.
So if I'm on a trip to Dallas to make a delivery.
Yeah,
lunch
no,
ready,
if you just Google that, usually when you think of travel meals, it's where you're going somewhere else, you're not returning that evening, it's too far away. You stay the night, you go to a conference, things like that.
I was gonna say, what if the conference is in Dallas?
It wouldn't count.
So Mary Kay seminar is out for those of us who live in that.
But if you're staying over.
It would only let me deduct half of it when I did that.
Probably, there is, IRS sets really good guidelines, or really specific guidelines. So if you just Google that, it will tell you.
Yeah.
But I think there's a mileage, I think there's a number of miles.
Wow. So those people come from out of state get to do it, and we don't.
Okay. Well, so you are doing, a lot of yours online, obviously, your business.
Yes.
So how, so if anyone is interested in hiring you, I see you have
I've
some
got business cards,
cards.
so you can pick up.
So you can, here, we'll pass them around. If you guys are interested, you can, I'll pass the whole stack. If you want one, take one and keep passing them around. You can get a hold of Chris. Is that the best way to get a hold of you, that number? I know you don't have a website.
I
or-
really don't have a website, so, yeah.
So that's, getting a hold of her on that is the best way to do that. And we can put that info in the group me for those that aren't here today as well. So-
Yeah, no show, no go,
That's
right?
what I'm saying.
I'm with you. I'm just kidding.
Okay, well, thank you
You're
for
here.
coming,
You're
we
here.
appreciate it, so. All right, well, we will, we'll move on to